Currently taking the short position here on the SPY. The Spider 500 looking like it might have had a little bit of a top at the 295.58 today. So do have an open position, looking for a little bit of a scalp trade. Going to be kind of careful on this trade with the fact that we are extremely bullish, up 3% on the Spider today. Looks like we might be hitting a little bit of a top. So trying to get a 10 or 15 point pullback maybe. Currently not doing so well on this trade. We are down $200. Bought the 294 puts expiring on 5/20 at $214 a piece. Total capital investment on the trade so far, $4,280. Looking at the Robinhood, here's the P&L on the trade if you're following along. None of this is a recommendation, just following along on my trade as I do have the short open here. All right, coming into the last hour of trading. And our trade today is getting absolutely crushed because we were complete idiots, decided to short the market that's going straight up. But we're still up. So doesn't look like there's anything pulling back in the market. If you're long the SPY, I'd stay long. Nothing's looking, even though I'm short, I am not seeing anything to kind of give me hopes here today at least. We've just been trending straight up all day. Everything, ticks, 80 lines, everything you would look at today. Higher highs, higher lows. We're holding above the 295. That's what I'm really watching coming in here into a close into the end of the day is what happens with this 295. 295 price level on the SPY is definitely a key level. And it's going to be interesting to see what the close does. If it is able to hold on to that 295 or lose it. There's definitely been a battle most of the day, especially around lunchtime. In and around that 295. Broke above it here in the afternoon session. But closes are important. I do believe that closes are important. And so we're going to see what we're able to do at that 295 of where we come into the close and make a decision on this position that we opened today. Which is massively underwater. Those of you following along, watching any of this live, have watched me lose $1,000 today. Because I'm amazing. Hey, it's the way it goes. Can't make money every time. The outcome is not up to you. I still like where I shorted. The one mistake I do think I made on the trade today is got to about break even and up a couple $100 at the lunchtime session. And when that trade wasn't working for me, that would have been the time to take it off. And considered it, but did not do it. Got a little bit greedy. And then as it ripped against me fairly quickly, which I thought it would do as it broke out of that consolidation range. Still liking the biased position that I have. Has some time left on the options. I still think there is a potential to trade lower here into the middle of the week. But nothing is showing that. So that is just a thought. Nothing is showing that as a possibility. The one thing that would give me some pause to reconsider that short position and maybe keep it open would be in the event that we lose the 295 and close below the 295 today. And if we do close below that 295, that could set up and embolden some shorts to step in here, especially in the overnight session. We are having some more good news come out in the market today. More states, including Michigan, Governor Gretchen Whitmer has decided to open up some of the counties, some of the regions in Michigan. Bars and restaurants opening at 50% capacity at the end of the week on Friday, which is a significant move. She's been one of the toughest governors in the state on the lockdown. And to have her starting to reverse some course probably indicates a trend that we're going to see moving forward, where we're going to see more and more states open up. The question is going to be, is what impact will that have on the economy? What's going to happen? Everything right now in the market is pricing in the fact that we are going to have a V-shaped bottom, a V-shaped recovery. And that whenever the authorities, the governors, the health officials, whenever they decide that it is safe to open up, that people are going to flood back into these bars, these restaurants, and the economy is going to just go right back to the way it was before. That's what's being priced in right now. And what is yet to be seen is if that is actually going to be the reality. Just because bars, restaurants are once again going to be allowed to be reopened doesn't necessarily mean that people are going to come out in the numbers that they did before all the lockdowns started. And what impact will that then have on the stock market, on earnings, and on profit and not losses? I don't know if the answer to that is clear. And the answer to that for sure is not certain. And yet the stock market is priced in very little downside once we start opening up again. What say you? Trading Nation, what say you? Will this be a V-bottom? Will this be a turnaround? Or have we just seen maybe a pullback towards all-time highs, towards that 300 level in the SPY, and then setting up for a second move lower? All those questions are out there. But right now, we definitely have the Powell put in place. Once again today, the Fed is coming out. The Atlanta Fed President, Bostic, says the Fed will act again in whatever way necessary if it's required. And so the Fed has that infinity money button ready to go. And look where we are here, 3.34%, 1,000 points on the S&P 500. Mainly on the Moderna news that they're getting some benefit and seeing some positive results from a phase 1. Not a phase 2, not a phase 3 trial, but a phase 1 trial of this vaccine. 3% move. Amazing. If there is a vaccine that is proven effective, will we see a limit up day? Will we once again be above 300, 305 on the SPY? Roaring once again to all-time highs? Can you imagine this stock market taking out the all-time highs from the beginning of this year at a point when interest rates are 0 to negative? And all of this money from the stimulus is in the economy. What happens then? Can the Fed sit on the sidelines and do nothing if the stock market reaches all-time highs? Takes out the all-time highs? With interest rates at 0 or negative? Or will the Fed then have to step in and start that long, miserable process for the market where we start taking interest rates higher to cool off asset inflation? Although at this point, it's my opinion that inflation is not our problem. In fact, we are going to desperately need inflation if we are ever going to pay off this amount of stimulus that is now in the system. Just like after World War II, when we printed lots of money. That money now seems insignificant, mainly because of the role of inflation. On inflation alone, the GDP number has gone up, resulting in what was at the time a massive amount of money seeming somewhat insignificant. This round 2 of the stimulus package is somewhere around $3 trillion. I remember when the entire national debt was $3 trillion. And now we're looking at a stimulus package, phase 3 or 4, however you look at it, of $3 trillion alone. What was the entire national debt now seems like an insignificant number. The only way to get out of this amount of debt, if it is even debt when you owe it to yourself, but that's discussion for another day, I guess. The only way to have the amount of this stimulus seem somewhat insignificant, especially in comparison to the national, the GDP, the gross domestic product, as a ratio, is for there to be significant, if not at least modest, inflation. If in the coming years we see deflation, that's going to be a lot worse than inflation. None of this, of course, is lost on the Fed or the Treasury Secretary. They're very well of this basic economics. And they will be watching very closely the role of inflation. Look at that once again. Sorry, we're going to take a little sidebar to look at our trade. We'll get back into this discussion. Back down to the 295.4, and then boom, here come the bulls. Once again, down 980 to 1,000 on our trade today. Trying to catch a fallen knife, or in this case, a rocket to the upside. Trying to catch a little bit of a downside pullback and rip my face off. Smack my hand trying to get in the cookie jar. Completely taken out. Let's talk about this trade for a minute. I am still watching the 295. I'm going to pull over the daily chart for just a second and give you a little look at what I'm looking at and why I will continue, it looks like, especially if we lose the 295, to hold on to this short position. Here's what we're looking at. This is the daily chart. Never mind all my lines. You might ask what that green dot is. The green line. Zoom out. Let's go to the weekly. If you go back, 2018 highs, just a simple vertical trend line, which is kind of held and bounced. And when we lost it here, we completely lost it, and we fought it a little bit back on the upside. Now we're clearly above it. On the daily chart, one of the things that I'm looking at here, let's go back to the daily, is we now have a significant daily gap. 50-some handles in the S&P 500, which is inside the range. And so the question is, this really isn't at a point where you would see a turn. And so if you look down here, when we came off these lows, this was very clearly a V-shaped reversal, and this gap has not been filled. This is a breakaway gap to the downside. This is a false candle. We have a breakaway gap on the downside, so we're sitting in between these two breakaway gaps right now. Right about middle of the way to that 61.8 fib. You can see the channel. We got a little bit of a peekaboo above the channel today after gap. I don't think this daily gap here, which is inside a range, is going to be another breakaway gap. It very well could be a breakaway gap. And if it's a breakaway gap, this channel is toast and we're ripping higher. 310 is, we'll probably go to the top. Where did we bounce here? 315. Can you believe that? 315 is not out of the question here. Which way it's going to go, we don't know. But the odds on show me that we're probably going to come back and fill this gap. Will we go higher first? Potentially. And so with the trade here, I am still watching the 295, and you can see as we come into the last 45 minutes of trading or so, we're making a push down. We're making a push back down towards that 295. Is today's move, and the move of the last week, nothing more than a shake and bake? I'll rally them down, take out the longs, get everybody on that short bandwagon, only to have a rip your face off rally, including a 50-point over the weekend gap up. Test the top of that trend, get everybody saying, whoa, shorts have got to cover here, right? Especially when the next stop could be 315. We're looking at 5-10% above it. Take a little rally above the channel. Get all the longs back on board. Do you pull the rug at that point? Remember, the market's role is to make as many people as possible lose as much money as possible. And look at the money. Look at the trading action of the last week or two. It has totally destroyed shorts who had poor trade location. And it's totally destroyed longs. All within the last week or two. And today we're seeing the same thing. What's going to happen with this 295? Do we close above it? Do we close below it? Hey, Robert, this is TOS, Thinkorswim, TD Ameritrade. That's what chart I'm using. This is the trading software. I do like the trade on Robinhood. I trade, I have a good position of my trading portfolio in Robinhood. I find it fairly easy to move in and out, move money in and out. TD Ameritrade is free trades on stocks. The options still cost some money. But as far as software, Robert, those of you watching, charting software, what you can do, what you can program in on Thinkorswim, I'm not sure there's a better program. As far as I know, they're still offering this program free for those who have an account. You might even be able to just use the program with where you just paper trade. So you don't actually have money in the account, but you still use the software. This is where I do most of my charting, is in the Thinkorswim platform. This is where I do my looks. Here's the channels that I had plugged in for myself today. You see my line, which was on the chart from a little bit ago. Let's take a look at that support. On a 30-minute, you can see we had this overnight high on Sunday night a week ago. I thought we would come back and retest that. I still think we might come back and retest that. But once we broke above that today, it was off to the races. And we got this first 15-minute range today, which I was thinking on this pullback here we would come back and touch, and we never did. And thus I'm completely upside down and wrong. Pie on the face trade. Wrong or early, that's yet to be determined. Definitely was early. And you can see from the daily chart, 5-minute chart, there is really nothing bearish on this chart. Run up, minor pullback, sideways, flag pattern, new highs, minor pullback, flag pattern, and now we're just kind of flat top. And now we're just flat topping up here. They're not wanting to give up the 295. This 295 level is not an unknown level. It's being watched by a lot of people, so it's significant today coming into the close. Comments, questions, topics you want to discuss here coming into the close. I've got to decide what I want to do with this trade. From a risk management standpoint, I should hedge it or take it off. A greed standpoint says leave it on. As we've seen so much over the weeks and months, significant amount of the move, especially in the spiders, the overall market, has occurred after hours. Gap ups, gap downs. You can't get in, can't get out. It's much the case today. You look at the range today, low of the day 290, 271, and 296 is the high. 40 points. 40 points intraday, not completely insignificant, but that's less than half of the move since Friday. 928 point move in the S&P 500. Majority of that move coming overnight. You were in it or you were out of it. And so what I'm considering right now is what to do with this trade. Could hedge it, sell some puts below it, take off some of the risk. Have 20 open shares, I could sell some. I could go out and buy a leveraged ETF. The XPXL. 3 times leveraged. Try to hedge off some of the deltas. Or I do nothing. At which point I will still have $3,000 of risk riding on the spiders, the S&P 500. Going down to my break even to be 292, just under 292 by Wednesday. What to do? What would you do? Trading Nation. Yin? You out? Take the loss? Pie in the face? Be a good corporate citizen following trade management rules? Hedge it off? Or let it run?